All right, what's going on, everybody? I hope your Monday is off to an amazing start. Today, what we're going to be doing is paper trading our algo bot that we made last week to trade SPY. I want to get right into it. Reason being so is because we're a few minutes behind. We're supposed to start at 9:35, but we're starting a bit late. So just to be able to, oh, my name's Creative. What we do here is being able to create different coding projects, right? Whether it's algo trading, that's what I kind of been stuck on these past few weeks, or it's being able to do machine learning, right? Or being able to create different AI agent projects. But right now, we've kind of been stuck on algo trading. I mean, it is advantageous because you're going to be able to see me go through the entire process from start to finish. We've just finished this up last week, so I want to be able to do a live paper trade so we can see, okay, what are the results? Is the bot able to actually make money? This is a paper trading right now. And then later on this week, we're going to see if we can do live trading. So let's go ahead and let it go. All right, perfect. So the bot is going. And again, we're trading SPY. And this bot, its main job is to be able to trade spreads, right? And remember,
Order filled.
oh, look at that. It already found one, but it was kind of expensive. So we've already found one. Here's the spread. We have a bull credit spread that we just opened, and I'm waiting for it to be able to populate. So as soon as that populate, we can talk about that a little bit more. And I'm using IBKR, Cursor, Claude Code, in addition to ChatGPT whenever we need to flesh out some ideas. So this is the paper trading account that we're using with IBKR. Now I just want to be able to make sure that the position that was open, okay, here it is. All right. And remember on Friday, we added a Mr. T type of adage into here. So let's go ahead and read that so we can understand a little bit more about the position, right? I'm not going to do the whole voice because, again, I do sound nasally. I am a little bit under the weather, but nonetheless, let's go ahead and talk about it. So what we opened up was a call debit spread, right? We're bullish on the market. And reason being so this means you're betting on SPY to go up. Full SPY goes up above 664, right? Your short strike. The maximum profit is $61. When SPY is greater than 664, you need price movement up to make money. You lose money, and don't be a fool, right? If SPY goes below 663. So SPY goes below 663. Both of these expire option worthless, and then we lose the $38 that we spent. All right, so y'all have to forgive me. So long, and then we have our theta day working. So the position is open, right? And we're actually trading it. So right now we are losing a dollar. But the thing I love about this is, right, this is algo trading at its finest, right? We have the idea, we back tested our idea, and now it's actually trading, right? So let me go see if I go. I'm gonna go actually look at this spread and Robinhood real quick and just go take a peek at it. And if you all do have any questions while we're doing this, please um, feel free to drop them. Again, I just gonna have to forgive my nasaliness. And there's another bot that we're working on that we're going to create the bot for today, but I wanted to get this one going because the other one is our lotto bot. And what that means is that it's looking for. So I think what I should do is just take a step back and explain the spreads again. All right. So while this bot is going, right now it's making money. Yeah, I'm gonna keep. Let me look at this real quick. This is today. This is a debit spread, and it's making money. That's crazy, ain't it? Um, What are the legs? You said 663 and 664. Oh, that's crazy. It is making money. We bought it at 38. It's at 44 right now. 40. So it is making money. Um, so let's take a step back and just go over the project, the excuse me, the type of option tradings we're doing, how this works, and then we're going to jump right into our another project that we're working on, right? So we are trading live, and I think that's something that's phenomenal. But let's just talk about this a little bit more so we can understand the premise behind it. Um, can you explain option spreads like I am 12 years old and make sure to use proper analogies out of the box ones so we can make sure that the point is driven home. So right now, again, we're live trading our bot that we created last week. We do have another one that we're going to finish, right? I started it yesterday, but I'm going to finish it with you all today. But what I want to do is just set the premise because I realized last time, oh, it's at 42 right now. We got in at 39, but it's at 42. So that's kind of cool. Um, so I realized that I really didn't break down what option spreads are. We talked about Greeks, right? Should we go over that as a refresher? All right, so let's go over the Greeks real quick. Greek, 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 Greek. Nope, 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 nope. All right, you gonna make me look bad? Yep. Option trading. Remember, I used this. I want to go over the Greeks. Basic principles. We talked about that, and all this we went over. Okay. So let's go basic. Okay, hold on. Boom. All right. Let's just talk about the Greeks first. Then once we talk about the Greeks, then we're going to go into the spreads. I think it's a little bit more sound. So this is the spreads. Can you explain the different option Greeks? So I'm going to talk about the Greeks first, and I'm going to scroll back up and talk about the spreads. Today we're going to be spending a lot of time on options. We've done a lot of great work for. I hate when it does this. All right, which one do you want to do? Left or right? Left or right? Let's do left. Okay, so let's break this down. Option Greeks is the secret superpower that tells you how the option will behave when things change. Don't worry, we'll use fun out of the box analogies. Okay. Imagine you're playing a video game. You're controlling a character, your option is in the market game. And the Greeks are the stats that determine how your character reacts when stuff in the game changes, like weather, terrain, or enemies, right? Delta is how much your option moves when the stock moves, right? Remember, we had a whole. Hold on, let me bring up this whiteboard again, real quick, so we can go over our example. You're really making me look bad. All right. So delta again is how much your option moves when the stock moves. So for an example, all right, here's our example. Beautiful. So can y'all see that? Let me zoom in. Hold on. Let me zoom in. Oh, too much. And that should do it. All right, can y'all see this? All right, perfect. Oh, that's way too much. All right, let's do this. All right. So delta can represent two things, right? It can represent the probability of profit for the underlying stock, right? Or it can represent the relation of the movement from the underlying option price to the stock price. So, for an example, so let's break this down. So, for every $1 that the stock price moves, right, the option price will go up X, and X representing the delta. So, in our example here, we're going to have delta representing zero point 0.5, right? And the call option of $1 with the excuse me, the call option of $1 with the strike price of 50 and then the stock price of 100. Now remember, with every one option contract, there's 100 shares in there. So in order to get the underlying cost or the value of our option contract, what we're going to do is take that $1 strike, right? Because that's what we paid for it, and then to multiply that by 100, and then we have it's $100 is our current value for the option, right? Now what happens? And we're talking about delta right now, right? And remember, delta could represent two things. It could represent the probability of profit. So what does that mean? If you see a delta of zero point 0.5, that means you have a 50% chance of being able to make money for the underlying option contract. Or what this means is that for every $1 movement, the option contract is going to move zero point 0.5, so half of that, right? So let's break this down a little bit more. So if the stock went up to $56, now what is our option contract worth, right? So the option, the $1 option will go up by the delta. So our delta here is zero point 0.5. So with the $1 movement, our option contract is now worth 150. Let's break it down a little bit more, right? The original option price was $1, right? And we have to add our delta because the stock price went up, right? So if the stock price went up, we're going to add our delta, and now it's 150, right? In order to get the value of the contract, we're going to take the 150, multiply that by 100. Now why 100? Because remember, there are, excuse me, 100 shares in every one option contract. All right? So that's why we're multiplying it by 100. And then we're going to get our value of 150, right? But we have to remove our original cost in order to get our profit of $50. Okay? What happens if the stock price goes down to 55? Well, if the stock price goes down to 55, this is what's going to happen. So we have to take our original call price, right? The $1, then we have to subtract because it went down, right? And I know this is like we're back in grade school again, right? Word problems. So this is another word problem. So if it went down, you're subtracting. If it went up, you're adding. So went down, you're subtracting by the delta, right? Now we have a delta. Now we have the value of zero point 0.5. zero point 0.5 times 100, 100 being is because there's 100 shares in every one option contract. I want to keep saying that so we can drill some points home, right? And then our value is going to be $50. Now, what is our net profit or net loss? So we're going to take the $50, that's the value of the option contract, the original cost, which is 100, and now we have a net loss of 50, right? Let's take a peek and see how our bot is doing right now. So our bot has made $3. Remember, it started at like 5 minutes ago, 10 minutes ago, and it's working. And this is a bot that trades SPY, right? And we made this last week. So if you want to go check out the previous videos on the channel, you definitely can. And we're going to be doing this more and more, right? I'm going to show you all my process, how we've went through it, and things like that. And the reason I like this is because we're not over trading, right? We're trading SPY. SPY is one of the most liquid. What's that? 53 right now. That's crazy. We got in at 39. So what does that mean, right? So let's break this down. SPY live trading, and let's put the date 13/25. So we got in at 0.38. All right, what does that mean? Now remember, for one option contract, that equals 100 shares, right? So the value of the option contract is 0.38. If I could write, okay, let's put this on another line. 0.38, right? Multiply that by 100, and we're going to get $38, right? If you want to really break this down, I can give you all the delta, but let's just keep this super simple, right? We're just going to be looking at the underlying value, right? So the value currently is 54. So the value at 10 a.m., right? I'm Eastern. EST is 53, right? So what is the worth of the option contract? And this is a spread, right? This is a debit call debit spread, and here are the legs, right? We're at 664, call 1013, sell to open, and we have 663, call 1013, buy to open. Now we're going to explain this down. We're going to explain this really, really thoroughly. Buy to open, buy to open. All right, and we got in at 38, and we got in at 9. Let's call that. That was like 9:48 a.m. EST. All right. So we're going to break this down so we can understand what the spreads are. All right. So we're not just going to leave this here, but we're going to break this down so we can understand what the spreads are. Right now, I just want to keep it super simple so we can keep track of what we're doing. Right. It's at 48, but let's understand this. So if it's at 53, so what's the value? So remember, we're going to take the 0.53. That's the value of the option contract times 100. We have $53, right? Now, what is the P&L, profit and loss, right? So we're going to take our original cost, which is the 38, right? And I'm doing negative because that's what it cost us, plus the 53. That's what the value is right now. Let me just put this down. Negative because this is what it cost us to purchase the option. And then we're going to add 53, right? Because this is the value right now. This is the value of the option contract now, right? So we have a total profit of I think that's like $15. Okay. $15 total profit. Profit currently. Right? So let's try this one more time. So the value of the option right now, let's look at it, is 47. Value of the option contract now is 0.48 at 10:04 a.m. Now go ahead and put in the chat what you think it's worth. Now we did a couple examples, so you should be able to tell me, right? So go ahead and tell me, put in the chat what you think it's worth. If the option it's worth right now 0.48, right? So if it's worth 0.48, how much is it worth, right? So remember what we're going to do is 0.48, and this is the value of the contract, value of the option contract, right? Then we're going to multiply that by 100, and we're at 48, right? So currently, and this thing is jumping. It just went back up to 50. Currently worth at 10. I'm going to do to keep that 10:04 a.m. EST is the 38 because that's what it cost us. Remember, plus the 48. That's what it's worth right now. So we have a $10 P&L, $10 total profit. So that's not bad. And this is what our body's doing right now, right? What it's waiting for, excuse me, is 20%. I think it's 20. It's 20 or 50%. I think it's 20%. As soon as it hits 20%, it's going to sell it. So that's in essence what we're how we're going to be trading on options, right? So what I want to do now is take a little bit deeper dive and then talk about we talked about delta, right? Now we're going to talk about gamma. Now, gamma is how fast your delta will change, right? So delta, remember, is going to tell us one of two things. It's going to tell us the probability of profit, right? And it's going to tell us how the underlying option contract is going to move in relation to the stock price. Remember, if we have a delta of 0.5 and the option and the stock price moved up $1, that means that for every $1, it's going to move up by half of it, 0.5, right? So here, it just broke it down right here. So think of delta as how much your car turns when you twist the wheel. If point 0.5 your stock move, excuse me, if delta is point 0.5 when the stock moves up a dollar, your option moves up point 0.5, right? If delta is 1, your option moves exactly like the stock. And I've seen it, but you'll rarely see that, right? I mean, if you do see it, I mean, jump all over it like checking on grease. But nonetheless, let's keep going. So if the stock price goes up a dollar, your call option delta zero point 0.6 goes up to zero point 0.6, right? Your put option negative because it's put we think it's going down and goes down to zero point 0.6. So delta tells you the direction, right? Gamma is the steering sensitivity. Gamma is how quickly the steering wheel becomes more or less sensitive. When you drive fast, the stock moves closer to your strike. The steering delta becomes twitchier. High gamma, right, equals your option delta changes quickly. Low gamma is smooth, steady turning. So in this example, if delta goes from zero point 0.3 to zero point 0.6 really fast as the stock rises, that's high gamma. So your car suddenly becomes a race car, right? Theta is time. So theta measures how much value your option loses every day just from time passing. So that's why we do zero DTE, right? We're in and we're out of that thing. Oh, it's at 48 right now. 48, 46. So not bad. Not bad at all. So let's keep that going. So let's measure, delta measures how much your option loses every day just from time passing. Even if the stock doesn't move, your option melts a little every day. So that's why we do the zero DTE. That 0 days to expiration allows us to be able to take advantage of the momentum, the breakout, the volatility that's in the market for the current day. And we don't have to worry about holding it overnight. We are going to create strategies that enable us, and this is going to be for different companies, right? Whether it's for Apple, Microsoft, or just being able to go out there and scalp anyone or snipe anyone, right? But it's a matter of us. I wanted us to build a winning strategies, right, that can be able to print money. I think being able to do what we're doing right now with Spy, it is a money printer, right? But just follow me, but don't follow me, but follow me. All right, excuse me. Theta measures, we talked about that. So even if the stock doesn't move, your option melts a little every day. Because options are like ice creams, delicious now, but worthless if you wait too long. So a theta of zero point zero 0.05 means that you lose 5 cents per day. The closer you get to expiration, the faster it melts. So that is time decay, right? Vega is the weather report. Vega measures how much your option value changes. If the market becomes more or less stormy, volatile, and that's why I'm keeping VIX up right now because you see they move in an inverse relationship. So when VIX is down, you're normally going to see SPY pop, right? And when SPY is down, you're normally going to see VIX pop. And what we're using, right, our trading strategy is using VIX as an indicator. So what it's saying, all right, when VIX are at these levels, it's best to be able to trade SPY in a bullish market. So that's why it opened up that call debit spread because it's bullish on SPY, right? So when we opened up this strategy, when we opened up this option, we had, I think it was 20. We had a VIX of 20. Yeah, VIX of 20.22, right? It's crazy. So when we had that VIX of 20.22, the bot was like, all right, I'm bullish on SPY. And because I'm bullish on SPY, I'm going to take out this call debit spread, right? So right now, it's at $7. So this option, right, that we open up, and it's one at a time. And it doesn't. We're not greedy. We're one at a time. We're in and we're out. And this is a bot that we only trade Monday, Wednesday, and Friday. And that's why I'm going to create this other lottery one, because this lotto one we can trade every day, and you're going to see why. All right. So let's go back to the explanation. Vega, right, is our weather report. Vega tells us how much your option value changes if the market moves excuse me, if the market becomes more or less stormy, volatile, right? High volatility, big swings. Options can become more valuable because anything can happen. Anything can happen, right? Low volatility, right? A calm market. Options lose value. So if you sell umbrellas, options, you make more money when storms is coming, right? When a storm is coming, our volatility is up. But when it's sunny and calm, no one wants your umbrella, so prices are down. So Vega is volatility sensitivity, right? Rho is the bank mood monitor, right? Rho is how your option reacts when interest rates change. It's like your parents' mood affects how much your allowance gets. Not the biggest deal day to day, but still matters. When interest rates go up, call options increases slightly, but put options slightly decrease. When interest rates go down, the opposite happens, right? So rho is interest rate sensitivity, right? So let's just go over this one more time. Let's think of this why like a gamer. So delta is how much your option reacts to the stock move. Excuse me. Delta is how your option responds to the stock movement or the profitability index. So if it's going to be probability of profit, excuse me, probability of profit, delta is going to tell you. It's going to tell you how the option moves in relation to the stock and the probability of profit. Gamma is response to itself, right? So gamma is going to tell you how fast delta is going to move. Remember, theta is our time decay. So every day, our option is going to be losing money if we're not trading it responsibly. Vega is the volatility. High Vega means that everything becomes a little bit more expensive because anything can happen, right? Low is a little bit low market. So just looking at this, do you think this is high volatility or low volatility? I'm not gonna hold you. When we started last week, excuse me, when we started paper trading on Friday, VIX was at 16. It popped $3 in a matter of 30 minutes, right? To me personally, I think we're in high volatility. Moving towards being able just to remain in that maybe for the next couple of weeks, and I think that's a great way for an option to be. And look at this, VIX just popped. Look what SPY doing. SPY's leading. So you see that inverse relationship there, right? When VIX is popping, SPY's like, all right, bruh, you can have a room. I ain't even try to be in here with you. You got it. You got it. Right. So I love to be able to keep these two open when we're trading our bots so we can keep an eye on it. Right. And rho is the interest rates, right? When interest rates go up, you're seeing call prices go up a little bit and put prices go down. And the inverse, when interest rates go down, calls are going to go down, puts are going to go up, right? So now we have to explain our spreads so we can understand what the spread is doing, right? And then what I'm going to have do is like really break this down so we can understand this right here. All right. So we're really going to break this down so we can understand it. So once we understand it, let's keep an eye. We're at 41 right now. So the market is taking a little bit of a dump, right? We're at 41. That's okay. The market is taking a bit of a dump. But we believe in the position. I think this is going because the highest we've seen it was like at 53, 54. I'm wondering why trailing TPs aren't taking place. But nonetheless, let's talk about the spreads. Once we talk about the spreads, we're going to go back to our strategy, the one that we have started on. We started yesterday, right? And this is our lotto strategy that allows us to be able to buy. I'm going to call it naked calls and puts because there's no spreads, right? We're buying calls and puts for like $10, $15, and we're hoping to be able to get it to like 50, 100, right? And these are our lotto. This is going to be our lotto bot, but we're going to talk about that more in a bit here. And y'all just excuse my nasaliness. I'm pushing through, so just excuse my nasaliness. All right, let's break down option spreads. All right. Imagine this: some sneaker flipping at the mall. You and your friend are at the mall. There are a hot new pair of sneakers dropping next week. You have two choices. You can buy the sneaker now at a certain price, like a call option, and you can agree to sell the sneakers later at a certain price, like selling a call option. But here's where it gets cool. Instead of just buying or selling one shoe deal, you can do both at the same time. The smart way. That's an option spread, right? Let's say the sneakers cost $100 today. You buy a ticket, a call option, so that lets you buy them for $100 next week, right? You also sell a ticket that someone says that they can buy them from you for 120 next week. That's called a bull call spread, right? Does that make sense? Why would you do that? So if the sneaker value jumps to 140, you can use your $100 ticket to buy them for $100. The person you sold the $120 ticket can buy them from you for 120. You profit $20 because you bought at 100, but you sold at 120, right? If the sneaker remain stays below 100, your ticket expires worthless. You lose only the small amount that you paid for the ticket, your max loss. Think of it like think of it like putting training wheels on your bike. You don't get to fly down the hill as fast as you want. You limit your profit to $20, right? But you won't also fall and scrape your knees too hard. You limit your losses as well. So why is it called a spread? Because you're spreading your bet between one option. You're spreading your bets between one option. You buy the sneakers at $100, right? I don't like this example. This is not doing a good job. Let's try this again. All right. Here is the debit call spread we currently have. Now, explain this to us like we are 12 and use creative out of the box analogies so we can really drive the point home. We're at 44 right now. All right, we're at 44. Absolutely. Let's take this debit call spread and break it down and explain it to you. Okay. Think of a stock like a race car. Each $1 move, the starts, excuse me. Think of the car like a race car. Each $1 move the stock moves, the car speeds up, forward, or backward on the track. You actually don't own the car, but you buy a special race car ticket, that's your call option, that lets you profit if the car goes faster in your direction. Okay, you enter the delta, power up, your speed multiplier. Delta is your speed converter. If delta is zero point 0.5, the race car moves $1, then your ticket gets zero point 0.5 more valuable per share. So, just like we talked about before, right? But they just do it a little bit more broken down. It's at 43 right now, 0.43. So for one option contract equals 100 shares. So zero point 0.5 times 100 equals for every $50 movement, $50 movement for every $1 movement, right? Because there's 100 shares in that one option contract. So that's why when the stock moved from 55 to 56, did it? Oh snap! Did it just take all of that? Shit, I just wanted you. Okay. Um. All right. We already went through that. We just want this explained. All right. You're making a bet on SPY the car to move upwards today, right? You bought 663 turbo ticket to buy to open, right? And you sold the 664 ticket sell to open, right? This means that you want SPY to go past 663 and reach 664. So where is it at right now? 662, because VIX is popping. So we're at point 44. Um, you want the car, excuse me, you want SPY to pass 663 and reach 664. But after 664, your profit is capped because you sold the 664 call, right? Your position, we bought at 663 call. This gives you the right to profit if SPY stays above 663. Right now, it's 662, right? But we still have some time, right? The position doesn't close till like noon or 2 p.m. or if it hits P&L. Let's look at the position real quick. It's at $4, right? The highest we've seen I think was like 12. I'm going to tweak a couple of things that I want us to be able to exit a lot sooner, right? I think the highest we've seen this position, 20%. I think I seen it. We've seen it at $12. So this is at like 53. All right, now we're back at cost. Yeah, now we're back at cost. Spy's taking a little hit right now. That's okay. By 663, this gives you the right to sell. We talked about that. Okay. Let's say SPY cost you $1, and then this costs zero point 0.5. Your net cost is 100 minus the 50, and that's $50. And this is your max loss. How you make money? If SPY goes below 663, we lose the $50, right? Because it expires worthless. But if SPYs go up to 664, your call goes in the money. Your 664 gets exercised against you, but since you sold it, your profit is capped. At 664, you make $1 per share. The distance between these strikes times 100 shares equals $100. But remember, you spent $50 to enter it, right? So our max profit is $50, right? But for this one, I think it's like 67. How you lose? SPY ends below 663. Both calls expire as worthless. You paid $50. Right now it's at 34, so it's taking a bit of a hit. You see, VIX is just gapped up. That's crazy. You see that? VIX just gapped up right now, and then SPY is like, bruh, I'm holding, hold it, hold it. That's one of those moments we're facing right now. All right. Profit math, we talked about that. So do we all get it? We understand what's going on, right? So we can jump into being able to. If you have any questions, please feel free to uh, drop them down. Hold on. Give me 1 second. We are trading our go strategy for SPY. Mm-mm. So we can drop in the chat, and also going to be finishing developing our. I'm just writing this down so I can keep track. Finishing developing our Lotto bot. Trading, buying extremely low SPY options. The chance for them to profit 2 to 3x. All right. If you do have any questions, again, please feel free to drop them. There's a lot of great things that we're doing right now. Boom. All right. So I just want to drop that there so you have it. Let me just check on our position real quick. All right. Perfect. So let me open our. Where are you? Where are you? Printer. Okay. Here's our a lotto strategy, right? This is something that I've already been working on. We started it yesterday, so if you want to go check out that video yesterday, you definitely can take a peek at this. But this is another strategy that we're going to be working on that enables us to be able to take advantage of trading SPY every day, right? And the reason I like this is because, hold on, boom. Give me 1 second. I just have to take a peek. Because remember lately, because of this whole weekly limits thing from Anthropic, I have to just constantly just keep an eye out on it just to make sure we're good. Oh, we're good. We're good. We're good. We're Gucci. We are Gucci them. All right. Let me go back to our previous. Boom. All right. Let me run the strategy right now so you all can see it real quick. And again, hold on. Do we want to explain it? All right, let's explain the strategy first. It's too long. Hold on. Give me a second. What we're going to do is have Claude explain the strategy. Then once we explain it, then I am going to run the back test. Review the following strategy, option trading strategy we are working on. We need you to explain this like we are 12 years old and make sure to really break this down so we understand what is going on in the strategy, how it profits, loses money, etc. Here is. Remember, we have a log. Every time we do a strategy, I create a journal for it. So that's something just to be able just to keep track of. And the reason I like doing this is because it enables us to be able to see, okay, what worked, what didn't work, what parameters do we need to tweak, shit like that. Here is the log for more. Now explain to us. We're at 27 right now. We should have been closed this position. Should I go jump in? I think I want to go jump in. Ah, you gonna make me look bad? You gonna make me look bad? Hold on. Is there because it's too open? That would it make sense? Proceed. Ah, damn, you gonna make me look bad, huh? Give me a second. You come here. Then you come here. You come here. Sometimes you just gotta tweak it a little bit. Now let's figure out why the hell you're not working. So I'm gonna have other Claude just explain this to us, and then once we explain it, we can continue on and keep going. Are you ready to work? What the heck? All right, hold on, y'all. Y'all just look at that real quick. Hold on. This don't make no sense. Um, um, this don't make no sense. Hold on, I just want to check that we're Gucci, which we should be. I don't understand why Jit like asked me for ID. All right, build something great, perfect. Explain to us, perfect. Let's see if it's Gucci now, which it should be. What are we doing right now? Hold on. Are you ready to work? Why are you giving me lip before for that one? Okay, I don't understand this. Give me 1 second, y'all. I just have to um status. Um why aren't you allowing me to use what I want? Y'all just bear with me. This doesn't make sense why I'm getting errors because this was just working fine as y'all can see. Give me a second. All right, here we go. We're Gucci. I don't know what the heck that was, but we just had to fix some things. But we're good now. All right, beautiful. Are you gonna spaz? Don't spaz. Don't spaz. Don't spaz. Thank you. All right, we're good. So I was able to get. I just had to tweak some couple things. I don't understand why that didn't work before, but it's working now, so we're good. We are Gucci. All right, so now what we're going to do, we're going to have it explain the strategy to us. And once we have the strategy explained, we're going to back test it so we can actually see the results. And once we see the results, we're going to continue working on the strategy. Now, if you were here with us yesterday, oh, it's at 38, right? It's at $30, 28. If you're here with us yesterday, you would see that this is a lotto strategy, right? It enables us to be able to bet on SPY using as little as $10, right? But this is a naked call and naked puts, meaning that there isn't any spreads. And that's one thing that it didn't do here. So we can understand what spreads does. Spreads, I guess it did. Spreads allows us to be able to cap our losses or cap our profits. When you have a naked call or a naked option, that means that yes, you can be able to make the money, right? You can be able to actually profit and make some money, but here's the caveat: you can lose your ass too. I've seen a couple of naked calls go like super negative. So just be wary of that. The Lotto Baby strategy. All right, imagine we're at a carnival and there's a game where you pay $15 to spin a wheel. Most of the time, the wheel lands on lose or small wins. But sometimes, boom, you hit a big prize and the wheel goes to 37.50 or even $60. That is this strategy. But instead of a carnival wheel, you're trading a super cheap stock options that expire the same day, zero DTE, right? So how does it work? We start with $100. You have a small account, just $100. So you're not betting the whole thing at once. Instead, you're risking $15 per trade, right? We're capping our. So in essence, we are capping our max loss, but we can still lose our ass. So let's explain. You look for a breakout between 9:45, right, and 11 a.m. You watch SPY stock, right, which follows the entire stock market or the top 500. It doesn't follow the entire one. It's the top 500 stocks in the stock market. So be wary of that. Excuse me. You're waiting for a big move where the price jumps up or jumps down really fast, at least zero point zero 0.08 in a minute. The volume, the number of people buying or selling, spikes by 15% or more. That means something exciting is happening. The market is moving with momentum, like a skateboard rolling downhill, right? You buy a really cheap lotto ticket option. If SPY breaks upward, you buy a call option, betting it will go higher. But if SPY breaks downward, we buy a put option, betting it will go lower, right? So you pick an option that costs anywhere between zero point zero 0.08 and zero point 0.25, super cheap, right? If it is far out of the money, meaning SPY has to move a lot for it to pay off, expires today, zero DTE, 0 days to expiration. So think of this like buying a lotto scratch off ticket, but instead of random luck, we're using momentum, the market energy to improve our odds. We hold it for 10 to 15 minutes. You don't hold this forever. Why? Because these options lose value super fast, called theta decay. Remember we talked about that before, right? We're in and out this thing. It's like an ice cream. They really like this ice cream analogy. I guess it gets the point done. It's like an ice cream melting in the sun. You set a 20-minute timer and you watch what happens. You exit for one of these three reasons, right? TP1, we hit turn 15 into 37.50. Trailing stop loss, you're up 50%, like 22.50, but the price starts falling. You lock in your profits before it disappears. And this one is supposed to have a TP. Oh, now we're negative. You see that? We went from positive to negative. So this strategy, we have to be able to tweak it a bit because it was supposed to take profit way before, right? But we're just a bit negative right now. But this is a good thing because you're seeing that. I mean, not everything busts and hits, but when it does, it does. And this is paper trading right now, and I wanted to do it paper trading first so we can actually see like a couple of tweaks that we need to make for this strategy. And I'm seeing those tweaks that we need to do live. But before we even continue, I want to finish up this lotto one because I think this one's a little bit cooler. I mean, both are cool, but I like this one because we're in and out, we're in and out, we're in and out, we're in and out, we're in and out. All right. What am I doing? Okay. Sorry. Sorry. All right, let's keep going. Where we at? Where we at? Okay. So time limit, the 20 minutes are up and you exit win or lose. 49% of the trades, the hard stop loss. The option crashes and it nearly worthless. You cut your losses and you lose. Rare, but it happens. How do you make money? You risk $15 per trade, right? Your goal is to turn the $15 into 37.50, 2.5 times the profit or more. If you if we win 60% of the time and lose 40% of the time, you still make money because the wins are bigger than the losses. Example of the day. Imagine you make two trades, right? You risk $15 and you exit at 37.50. We profited $22.50, right? Then trade two, we risked $15, but we exited at 150. We lost 13.50, right? The total for the day is $9, even though we lost one trade. Over 252 trading days in 2024, the strategy made 117 trades and turned $100 into $727, right? Over 600% return. How do we lose money? Sometimes the breakouts is a fake move called also a false breakout. The price jumps and you buy the option, then SPY quickly reverses. That's how, the next one I think we're going to do is a mean reversion one, but I wanted to do these two so I can understand it, so we can understand it a little bit more. Then go to our mean reversion because we're seeing this. That's reverse mean reversion. Your cheap option becomes worthless, or the market just doesn't move at all. Remember, you bought it so far out of the money, so the SPY has to move a lot for your option to pay off. If it doesn't, your option expires worthless. We paid point 15, $15 for the option, which is $15 per contract. So SPY moves in your direction, but not fast enough. After 20 minutes, your option is only worth point $0.3 per contract. So you exit it at $12, a $12 loss. Ouch. Even when you lose less than the 15 because you exit early. The average loss is around $9, not the full 15. What is the trailing stop loss? This is your secret weapon that makes your strategy work. Let's say your option is doing great. You paid $15 for it. Now it's worth $30. We had a two at a time profit, right? Instead of holding it until the 20-minute timer and risking it crashing back down, the strategy says, hey, once I'm up 50% or more, 1.5 times, I'll lock in my profit by trailing the price. Here's how we'll do it. Your option hits point 30, the peak price. The trailing stop loss is set to 0.35 below the peak, right? If the price drops to 0.95, you automatically sell and lock in the 30% profit. That way you don't give back all your gains, which we just did here. But we're making it back. We're making it back. We're making it back. It's at point 41, so we're making it back. What are the rides? You can lose 13.50 per trade if the trade goes wrong. You lose most of your $15 after fees. This is the risk of the lotto strategy. The group strategy, you can go zero fast. High variance, wild strings. Some days you can win 50 plus dollars. On other days you can lose $30, right? It's a roller coaster, not a steady climb. Every trade costs $0.34 in fees. That's the commissions and the regulatory fees. That's about a 9% overhead on the $15. So if you make 100 trades, that's $134 just in fees, right? If the market suddenly gaps down, likely bad news hits like on Friday. What's our SPY? SPY's at 19. So SPY just dipped a little bit. That's what we like. Okay, we got a rally. We got a rally. All right, let's finish this. If the stock market suddenly gaps down, likely if bad news hits, your option can instantly become worthless. This is rare, but it's possible. All right, these are our back testing results. Why does this work? Momentum is real when the stock market breaks out volume plus big price move. It often keeps moving in the direction for 10 to 20 minutes. You're riding that wave. The trailing stop loss protects us. We cut our losses faster. We're not greedy. The target of 2.5% is not 10%. This is achievable, so you win more. What could go wrong? Market change. This strategy was tested in 2024, which is a bull market. Stock went up a lot. In a bear market or choppy market, it might not work as well. Yes, it will. You will see it 2023. In real life, when we try in real life, when you try to buy during a breakout, the price might jump after your order fills. The backtests assume you get the mid price, but in reality, we may pay more. Overfitting. This strategy has a lot of rules. Delta range, premium range, trailing stop loss, etc. Maybe it will work in 2024, but not working. You will see. Stop being an asshole. Bottom line, this is a high risk, high reward strategy. You are trading cheap options that expire today. Zero DTE, right? Betting on momentum breakouts. You win 61% of the time, and when you win, we make 2.5 times our money. But when we lose just about 60% of our bets, right? Like playing on a carnival game where the odds are actually in your favor if you follow the rules strictly. Only trade during breakouts, risk 15% of the trades, exit 20 minutes after trailing TP. All right. We got it. We got it. Beautiful. Now what we're going to do, all right, run the back test currently. This is 2023, right? Yeah, 2023. Okay. Run the back test and let's discuss the results. So we're actually seeing it live. We're going to run the baby. And it should chart it out for us. So I'm going to bring the chart up. I don't like this chart. It's okay. Oh, we're making some money. We're making some money. It went from negative, now it's positive again. I'm trying to figure out, bro. You better make me some money, man. All right, we're back testing the strategy. Perfect. And as soon as it charts, we're going to be able to see. Oh, we're up $6 right now. We're up $6. So we're making some progress. I ain't gonna hold y'all. We're making some progress and we're doing great things. Now it's just all right, consistently at this thing. All right, come on, man. But excuse me, excuse me. But y'all can see how this isn't hard, right? It just takes application. Then it takes us to being able to do this a little bit more consistently, right? Oh damn, Spy just took a shit on itself. You see? Yeah, at 36, 37. Is VIX popping? Look at that. You see that inverse of VIX is gapped up. So y'all see this inverse relationship that I'm talking about, right? When you have VIX gapping up like this, Spy is definitely going to say, "All right, bro. Spy's trying to stay in the fight. Spy is really trying to stay in the fight." So let's see how that works out. Why is this taking so long for us to be able to go, bro? It shouldn't take that long. It shouldn't take this long. Spy's trying to survive. And again, if you all do have any questions while we're doing this, please feel free to drop a comment. I'm here to be able to help out as best as I can. Again, y'all just excuse the nasaliness, but I'm here. We're pushing through. We're pushing through. We ain't gonna let this stop us. We ain't gonna let it stop us. And yeah, we moving. But that's a hell of a bet, though, right? For us to being able to turn $15 into potentially 37, 50, even 100. Shit. Um, I would take that bet. Who wouldn't? It's an opportunity for us to be able to say, okay, you know what? Maybe we can actually bust this thing. All right, this is not supposed to be taking that long. I think maybe, yeah, tripping. Let's get our conda environment. Hold on. Let's get our conda environment. Go ahead and activate that. Beautiful. Conda environment is up. Now let's run our back test. Let me see what it was looking at because this don't make no sense. This don't make no sense. And we're back testing the strategy that we just explained, right? We're back testing it based off of 2023. And what we're going to see is how well the strategy does. So why was it taking so long over there? That's interesting. Sometimes you just gotta let me drive the boat. Sometimes you gotta do that yourself. So we driving the boat. Um, it could be a bit better. Um, all right. This is a. So we're waiting for the strategy to go. Good start. Love the direction. Can we improve a bit so we can ensure it aligns with what? All right, strategy's running. It's going through phase one. And again, remember, we split up our back tests. Oh, look at that. So the first one we bust. We made $49, or we made $2, or $28. Made $28. We lost, lost. So overall, for 2023, we should be moving fancy. So this is strategy where we're back testing it to be able to figure out, okay, you know what? And just looking at it live, remember we do have a live bot running right now. It is kind of bleeding a bit, but the purpose of this exercise is to be able to see how does it handle in real. Okay, look at this. So our first half, we split up the back test. First half is testing. Second half is validation. But the first half of the year, we turned $100 to $400, right? About a 300% return. We have our sharp, which isn't the best of 0.38, right? Soprano, that's all right. Our average drawdown, our max drawdown. So the maximum that we lost for this strategy, now I'm going to bring this up, just talk about it real quick. So remember, the strategy is starting at $100, but the maximum that we lost in the strategy was, what is it, $8.64. So those at one point in time, the strategy was at $91, right? But gang was able to rally from $91 and then get all the way back up to 412. So I think that's kind of good. So what we're going to do, we have 7 trades that hit the first the 52 trades hit the $20 limit, and then trailing stop loss, we have 25 trades. So now we're running the second the second validation. So our first one we hit 3 straight winners. And then we have a mixed results, mixed bag, mixed bag. So this is good. I mean, we actually have a strategy that is robust enough to be able to work across years, right? It's not overfitted. There's no bias that we introduce. And it's a lotto type strategy, meaning that we're going to bet 10, $15 max. And we're trying to be able to see how much we can move this strategy. The only thing I kind of want to keep a lookout for is one trade a day. So we're not greedy. It's one trade a day, right? One trade a day. We either hit big or hit small, or there's a small. Um, no, so that's not bad. Hold on. Where's the chart? All right, let's open the chart up. Give me 1 second. This isn't all that. I'm not gonna hold you. Um, it could be a little bit better. The chart, I think, it's just too confusing. But nonetheless, give me 1 second. Copy path. Copy relative path. What are we doing? Okay, let's see what I'm supposed to do. Give me 1 second. What are you doing? Why isn't it working for me, fam? You know, you're making me look bad. All right. Here is the back test results. We try to open the following. How do we open in the browser? Now let's discuss. Okay. I did that, but all right, maybe I was tripping. But same shit I just did. Whatever. All right, so while let's bring it here. Okay. So let's look at this real quick, right? Don't do that. Don't do that. Don't make me look bad. All right, here we go. So we have our strategy that we just ran. And this is the chart for it, right? So as you can see, our first 2 trades we hit, right? And then we had a small loss, small loss. But the reason what I like here is this upward trend. But then we went for so validation and then testing. So then testing again. So for the first 6 months, we were able to go from $100, right? And then we peaked at 412.29, right? And then the next 6 months, so we see that same trend. If we were going to have this do it consistently, we probably would have ended up maybe at 100, 800, 900, whatever, right? But I like to be able to split it up so we can make sure that there's no overfitting. The strategy is good, it's working. And this is what it's explaining right now. All right. So the H2 performance, we had it stop at 362.39, right? Max drawdown, we just talked about that. This is when where it got down to $91.36. We just talked about that, right? And rolling 12-day trades. Okay, this is not bad. This is a strategy that is a little bit. I mean, we can tweak it a bit, right? Where we can like limit some of these losses, so that the strategy can actually perform. So let's go see what ChatGPT said. Oh, excuse me, Claude. All right, let's discuss H1. We talked about that, right? This is H1 and this is H2. And the reason I like to break it up, H1 is when we're going to be back testing, and then H2 we're validating what we just did here, right? Are we overfitted? Can the strategy actually work? What about us working in different regimes? So that's what we're doing here, right? Training and then validation. We just talked about that. Training, we had a 55% win rate and 312% return. That is not bad. That's okay, right? Average hold time is about 17 minutes. For validation, we had a little bit less trades, a little bit higher win rate, right? The returns are still over 100%. So you look at it as you look at it, and we're able to go from 100 to 362. Average hold time just about maybe zero point 0.4 higher, right? Profit factor is a little bit higher here. Full year, 156 trades, combined 474% return, right? We were able to turn $100 to 574. Both periods are profitable. Max drawdown is 1050, right? What stands out is the excuse me. Win rate actually improved in validation. This is unusual and positive. Usually, strategies degrade in validation, suggest that the strategy isn't overfitted for H1 data. That's a great thing. Profit factor is excellent. H2 validation is 3.96. You make $3.96 dollars for every $1 we lose. That's not bad, right? This is considered elite territory. Anything greater than zero point 0.2 is good, but zero point 0.3 is great, right? Consistent performance. Both periods had over 100% return. Low drawdowns. Similar hold times, which we like. Exits are working. The only thing is these time exits. Even though they're still profitable, I want to see if we can make them either be trailing TPs or take profits, right? Areas for concern is the win rate divergence. We had more of a win rate in the validation than in the training, so we had to figure out why there. But before, um, let's just go on with the explanation. Market regime shift. H1 had a banking crisis, volatility. Um, that's Silicon Valley Bank. Remember back in 2023, Silicon Valley Bank, SVP collapsed, right? VIX spiked. Where's VIX at right now? VIX is at 20, SPY's at 6. Damn, we're losing again. SVP collapsed in March. Spike jumped to 26.5. Strategy skipped those days. I love it. Low VIX environment in H2. VIX average 12 to 17 in H2 versus 18 to 23 in H1. Calmer markets equal cleaner breakouts. Strike price drift. SPY went from 380. This is in 2023, so mind you that. SPY went from 380 in January to 470 in December. Higher prices equal different option dynamics. Action. Let's check if low VIX performed better. Entry dropped in 57% entry, 68% entry. Why fewer entries in H2? Looking at the validation logs, the long stretch with no valid entries, and from July, wow, damn near 11 days. Another 11 days. Let's figure that out. Question: is this good or bad? Good, more selective, higher quality trades. Bad, missing opportunities, or market is just quieter. Time exit still dominating. Again, I want to be able to get that down. But the key here is that the times are still profitable. I know, but I still want to be able to get that down. Question: keep it if time stops are profitable. They're working as intended. Tighten it to 15 minutes. Force faster decisions. Which time stops were winners versus losers. Uh, for only 6 out of 7 trades hit the 2.5 time target. They're contributed huge profits in H1 and H2. Question: is TP1 too aggressive? Option one: keep it at lower it to 2.5 time, easier to hit, higher frequency. Keep it rare but massive wins. Compensate for the losses. I'm gonna try to lower it and see what happens. My take: keep it at 2.5. The strategy is designed to for rare big wins plus many small wins. The question for you is, why did the validation improve the strategy instead of degrade it? This is the biggest surprise. Usually we suspect the training and the validation, degradation for overfitting, but we got only a 16% drop. Still excellent. The strategy went up 10%. Theory. All right. Pick one. What's on your mind? H2 is up. Should we run 2024? Let's dig into the trailing stop loss. Are they working? Show me the worst trades and what went wrong. How do no? What I want to do is a few things. First, I want to. Where do you want to start? Do you want to start at the trailing stop loss or the time? Let's do time. All right. No, I want to figure out why we were sitting on the sidelines for damn near those June and July days, remember? So I want to do that. So I want to figure out why we're sitting on the sidelines for those days. And once we figure that part out, then we're able to tweak a couple other things. Where are you? You just said it. Different parameters. Should we have different parameters? Should we adjust the low volatility environment? H1 already had this. H2 had this. On average, it was very low. Should we have different parameters for different triggers? High, low? Or should we just keep it single? No, I think I like that. But, oh, here it is. 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 All right. We want to figure out why is happening and there were no trades and we were sitting on the sidelines for those periods. Let's take a deeper look into it and figure out why. All right, Vix is that. Okay. Jit is still, bruh. All right, y'all give me a second. I'm going to grab some water while this outputs. Give me a second. All right, so we're still outputting. This is great. We're going to analyze the gap. Let me have it do it on auto. I'm heating up some tea real quick. So y'all just bear with me while I go grab this tea. But there's a lot of great things that are happening, you know? Um, we actually have a strategy that works. Now I just want to look into it a little bit. Oh, we're at 22. Bruh. I really think I should just cut my losses. Let's cut our losses. And I don't know why you're holding on to this bag for so long. But what we're going to do is just cut our losses real quick. Option and then close all SPY. But how am I? Freak. Hold on. I just need to grab something real quick. I just need close all positions. Where is it? Where is it? Close all SPY. All right. So that's there. Let's go ahead and close this out.
Order filled.
Let's make sure we close that out. Let's triple check that we closed it. All right, we have no options open, and then let's run her again. What do y'all think? So we're gonna run it again, and then let's see what it does now. All right, beautiful. So I got out of that one. Oh, we're out of the entry. Should I modify it? Should I modify it? No, let's not force it. We're out of the, remember, it only trades from 9:35 to 11. It's 11:05. So I don't want to force it. Let's not force it. Let's wait until we analyze. Let's figure out what's going on here. And then once we figure out what's going on here, we'll be able to tweak it, right? So that's fine. That's fine. Well, this is good. We're able to learn a couple things. You should have definitely used. The script is taking too long and loaded. Then let me create a faster version. Create a version using Polaris and not pandas due to size. They're the same thing. Just one handles larger data sets, Polaris, and not pandas. Pandas uses like smaller data sets, so that's why it's taking a bit longer to be able to go through them. And remember, pandas is our Excel for Python. It allows us to manipulate, visualize, see if there's any correlation in the data. Right, NumPys is our calculator for Python. So sometimes pandas will work. Right, majority of the time pandas will work. But when you're talking about data sets, bruh, let me show you. This is just one. 418,271 lines of code. Panda's not going to be able to take care of that, right? So that's why we bring in Polaris, because Polaris can take care of this no problem. Like, you beast at this. I thought OpenAI would know this. Not OpenAI, you know what the fuck I'm talking about. Anthropic would know this, but sometimes you got to give it a little gentle reminder. So this is a gentle reminder that it's going to use Polaris in lieu of pandas, because pandas is not going to be able to handle that much data. I mean, it can, but it's going to be extremely slow, like extremely slow. See? Oh, you're using both. Why are you using both? That's interesting. You're using both. Um, Strategy requires both and spikes. Okay. Potential gaps. Recommendation. Lower. Analysis complete. All right. Do I have to run it? Let me just run it because I don't trust you right now. So we're going to run it. Let's see how it does. And while that's running, I'm going to go grab my tea. Um, I hope I was talking. Okay, you couldn't hear me. All right, I'm going to go grab my tea real quick. Hold on. This is still taking a while, too. This is still taking a minute. All right, what do I want to do? What do I want to do? What do I want to do? So we can do two things at once. This is what I want to do. Let's go here. I want to configure so we can have it trade from boom, 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 boom. Configurations, config. Bruh, I don't like it. Where are you? Oh, there you go. All right, paper, spy. There's our config. Where's our entry exit? Okay, start. Okay, here we go. Instead, this is just testing. Testing afternoon. So we're gonna put 11. I'm gonna put 11:11. 11:11, and then we're going to put. Is this military time, or can it be? I don't think it can be. I don't think it has to be military. I'm gonna do 1 p.m. Okay, let's see. It should be able to go now. We should be able to run it. And let's check you over here. You're still loading. That's crazy for you. Let's see if we tweaked it. Okay. Oh, look at that. It worked. Beautiful. Outside entry window. So you didn't. Oh, I need to. Why didn't it work? Hold on. Why didn't it work? Review the following from the log. We want to update so it trades from 11:11 a.m. to 1 p.m. Here is the config. Where did we go wrong? Then let's fix. Here is the actual bot. Oh. Got you. Ah, it is military time. So it is military time. Got you. Got you, got you, got you. And then let's go ahead and grab our bot. Perfect. So I just wanted to make sure. All right, perfect. We're in the window. VIX is at 1919. We found one. Um, all right, we just got in at 663, 664. You really like that. We got in at a different, and it cost us 24. Waiting for the order to fill. Waiting for the order to fill. Give us a second. Oh, look at that. So we have a 32% chance of being able to win, right, with the delta. Then also with this delta is telling us that for every dollar move, this option is going to move $32, right? IV is at 0.25. That's not that bad. We're waiting for the order to fill. Max profit is 77. Let's go a little time to buy. If we can get it to fill. A good little time to buy. See, right? It's right here. We're just waiting for it to fill. As soon as it fills, then we're Gucci. We just gotta wait for it to fill. Let's look at this. Bro, you're still pulling in the data? That's wild for you. That is wild for you. I didn't think it was gonna take that long for you to be able to analyze something. So we're about 90 minutes in. What I'm doing to the left of the screen, right? My right, your left, right, is we just placed, we're option trading our spy bot that we created last week. And this one does spreads. We talked about spreads, what spreads are, what delta is, what Greeks are. That's in the earlier part of the video. So if you want to go watch that, that's there. Now this,
Order cancelled.
okay, it canceled because it wasn't able to fill. I like that. Now it's going to go look for another one. So if it doesn't fill within just under 2 minutes, right? That's like just under 2 minutes. 120 is a minute. So that's like a minute and 55 seconds, right? If it doesn't fill within that, it's going to cancel it, and then it's going to go back out there in the market to go look for it again. Go look for a better entry. So boom, it's gonna go look for a better entry. It found it. It's still 663 and 664. We have a 36% chance of being able to make money, right? And remember, for every dollar movement, this option contract is going to move 36. It really likes this 664, 663, 664. Now we're just waiting for it to fill. All right. This is what here's what we're going to do. Review the logs for what we are working on. Now proceed to, it's the Greek and the open high low close and the VIX. Okay. We have the Greeks, which is down here. So I'm going to give you the Greek. Proceed to run terminal commands to analyze the data here. We have VIX. I gave you Greeks and Greeks at open high low close. Okay. Greek for Combined 2023 Greek combined 2023 Greek combined. Okay, here it is. And then it is open, high, low, close, 1 minute. Open, high, low, close, 1 minute. Eastern Standard. Perfect. This is probably going to cancel too. Now run a series of terminal commands using Polaris and make sure you're in the conda
Order
environment.
cancelled.
Yeah, I figured. Okay, another thing. Um, this strategy needs to be able to do a better job in looking at different spreads, right, or different strikes, because it's stuck on this 663, 664. I mean, I understand it because VIX is telling you that all right, this is what we need to do, but seeing that it's being a bit too rigid. So let's see what it does. Make sure you're in, then run the terminal commands using Polaris so we can gauge and get the answers to the. Oh, look at that! It went 664, 665. $13. This cost us $13, but we have 28% chance. Uh, Max profit is 87. That's interesting. I have that. Let's see if we go trade this. What's gonna happen? Where's Robinhood? Now we're just waiting. I'm wanting to be able to have it analyze the data. So it's analyzing the data and then we're running a strategy live. I just want to go put eyeballs on what it's saying. Debit spread today. You said 664 and 665. That's stupid expensive. It's 31. How did you get 13? Are you inverting them? I think you're inverting it. it that this same option that is trying to fill at 13, it costs 31 right now. I think there may be an inversion. All right, so while that's pulling, so let's go ahead and let's clear that out. Let's go here. I need you to work. Get me right.
Order cancelled.
All right. What I need you to do, we're just going to shut you down for a bit. We're going to go back to our previous session. Is it this one? No, it's not this one. Is it this one? No, it's not this one. It's all right. Hold on. Give a second. We want to figure this out. It has the log. Okay. Okay. Read so you can understand. We're not in that right now. So you can understand the underlying bot. Here is the bot itself. So we're kind of doing two things at once, but that's okay because we're following along, right? If there's any questions, please feel free to drop them. But what I want to do is figure out why this spread bot that we have built already, I think just looking at it, it's inverting the prices of the call input. Just looking at one that it tried to buy for 13 cents, right? But it wasn't able to fill. Review the logs from our current session. We made one modification So the bot is running from 11 a.m. till 1 p.m. EST. Let's hold on. Let's figure out why the orders are not filling when the bot is attempting to place them. Perfect analysis. Based on the deep analysis using Polaris and the terminal commanders, what I found the strategy requires two conditions to be set simultaneously: breakout signals, the price move plus volume, valid option contract. VIX environment. The mean VIX was 18.56 and the max was 26. The 23 mean was 15.15 and the max was 21.71. The difference is 3.4 lower points of volatility. VIX average 13.72, very low. 1,500 valid options across 671 timestamps. Only one breakout signal found. Right, plenty of good options, but almost no breakouts. VIX average very low. But then we had valid zero breakout signals. The strategy is working correctly. The options were available. The problem was the lack of momentum. Low volatility equals small price moves, fewer breakout signals. This explains why H2 had higher win rate versus H1, right? Good news, the strategy is selective but not trading in low volatility environments. Higher quality when it does trade, 65% win rate in H2. No false breakout signals to trade off. Low frequency and low VIX environments may miss some opportunities in calm markets. The fewer entries in H2s are not the problem. Here's the evidence that the strategy is working correctly but being selective during low volatility periods. The higher win rate in H2 versus H1 suggests that the fewer trades, higher quality entries are better than more frequent low quality trades. Your strategy is intelligently avoiding low probability calm markets, which is exactly what it's supposed to do. All right. Based on the logs, I can see the issues. The orders are timing out after 120 seconds without filling. This suggests the submitted status but never got filled by the bot. The bot is setting limit prices that are too aggressive. You see that too, right? With a 3% slip tolerance, if the mid price is 23 with a limit of 24 with 0 DTEs taking time expiration, the market makers are very cautious. They won't fill unless your limit prices give them comfortable profit margins. Perfect, I found it. High VIX has 3% slippage, but 0 DTE needs more tolerance. Your log shows that high VIX range, okay. The 3 to 4% is too tight for 0 DTE with the wide spreads. 8%, 10%, 12%, okay. Can you explain why widening the slippage and how this would work so we can properly understand it and do this via TLDR? So we're kind of going to be bouncing back and forth. Let's go back here, here. I'm just going to stop you because you just wasting time. Alright, we ran a series of terminal commands. Here is the results. Um, we're thinking maybe not introduce a method slash function so the bot can trade in low vol environments, or should we? Review and advise. Alright, so let's have it do that. Your bot orders are too cheap. Market makers won't accept them. Bot calculates the mid price of 0.23. Bot adds a 3% slippage. Bot submits orders at 0.24 or better. Market maker sees not making enough profit for me. Order sits for 120 seconds. I'm curious to see how can we market make for options. I'm going to figure that out. But we're going to figure that out. Hold on. Zero DTE, same day expiration, high risk for market makers, long bid. Market makers demand bigger margins on risky illiquid options. How slippage works. Slippage equals how much above the mid price you're willing to pay. The mid price was 0.25. Old slippage was 3%. It's 12%. The 12% slippage means you'll pay up to 3% more to ensure the order fills. What this change? Old order never fills. Most likely to fill. Mid, low. Max loss is still capped at a spread. With the spread width of dollar, you're still buying at reasonable prices within the spread. Well, 12% on 0.25 is a 3, so it's acceptable on 0 DTE. Alternative, I'm not using market orders. All right, let's proceed to keep updating and gauge performance. The reason I don't like market orders is because, bro, like, great question. Let me analyze whether this is a good idea. Option A, keep the current approach. Why not trades doing low volatility environments? The strategy is designed for momentum. Your edge come from explosive moves, 0 DTE gamma. Low volatility, small moves, less gamma explosive. You'll be fighting against the strategy core thesis. The win rate is higher when selective. H1 more entries, H2 selective. Quality over quantity is working. Risk of over trading, low breakout equals false signals, more noise, not momentum, could tank your profits. And adaptive, no, I'm not doing that. If you want alternative, you can do is expand the. I'm not doing QQQ. No, that means I gotta go download it, bro. I'm not doing that right now. If you insist on testing, no, no, we are good with where it is at right now. Now let's proceed to discuss the other items mentioned before. Can you provide a list of that so we can properly flush out and discuss? All right, so you updated slippage. Why orders weren't filling? Your bots are buying it too cheap. We talked about that. All right, let's see. Let's see. 1937. All right, it's 0.34%. 23. Okay. 160. Okay. What did it submitted at? 0.23. So let's go check. So what did you say? 664 and 665. But that is still too low. Where are you getting these prices from? um okay. We noticed that the pricing or where the bot is starting the bids at is still too low. Let's dive deeper and figure out the logic being used there and if it needs to be updated. Run a series of terminal commands before updating anything and advise findings so we can discuss. Analyze TPY only needed detailed trade by trade analysis. I think here's the trades. TP1 hit rate only. Hit rate is it too aggressive? Keep it at the current rate. VIX. Does the strategy perform better in a specific VIX range? Bi-directional. Do calls perform better? I'm not doing that. Right now, B. I want to understand the trailing stop loss. I think I'm going to go with the analyze the trailing stop loss. Um, our trailing stop loss saying losing money or cutting big winners is 35 too tight. Should it be 40? Should it be activated? Okay. Let's do here are the trades. Now let's review and advise findings. Let me take you off real quick. Perfect. Oh, let me check my levels. I don't think we should be hitting. No, we're good. Let's break this down. Here's what I found. The log. Okay. The issue found the market data is delayed. From whom? Your bot is using 15-minute delay codes for live trading. Where's the bot getting? Fix the market data. Okay. Where is the bot getting the live market data from? For live market data from? For both stocks prices, stock prices, and option pricing. So that fucking explains everything. So let you go. Okay. We're kind of doing two things at once, right? And I hope you all appreciate where my brain is going with this. Um, this works. We're still going to be able to figure out. I want to figure out number one why this first strategy. Um, so we're kind of doing two things, right? We're queuing our live bot that we're just running because there's a couple of things that we need to tweak there. And then I may need to take this off screen depending on what you put and say because I need to figure out, okay, what the heck? Theta data is perfect. All right. And then two, we're figuring out the TP performance, the stop loss. Oh my goodness, you're going to do that again. Um, Instead of running a script, can you run a series of terminal commands using Polaris and make sure you're in our Conda environment. Then advise findings. So let that go. So I know that's real time. Right. I know that's real time. Order pricing. You have theta data running locally, which already provides real-time bid-ask spreads. Option A, use data for bid-ask spreads. It's already running. I'm not upgrading. So you know how much that shit's gonna be. All right. Let's double check that we can get the data we need from theta data before updating. Um, is it that? Is it this? Yep. proceed to run a series of terminal commands and then make sure to advise of findings. All right. So we're kind of doing two things at once, but that's okay, right? Because it's almost like they're blended in a sense. This is our lotto strategy on this side, and we're analyzing the data to be able to figure out why some parts of the back test work and other parts don't. Whereas over here, this is our finish strategy. I just need to tweak a couple of things as far as the where the data is coming in from. Because having delayed data is going to kill you when it comes to option trading. So that's what we just figured out here, right? So let's figure this out. And I think it's going to come to the conclusion that, all right, bet you should be using theta data, um, which I thought it already was. I didn't think it was pulling the spreads from um, uh, IBKR. IBKR is where we are submitting the option to be able to trade, right? But it shouldn't be pulling in the data, the bid-ask spreads from there. It should be using theta data. So it's going to say, oh, watch, it's working. All right, bet, now update it. Excuse me. And just forgive my nasaliness. I should be back again at it by tomorrow. I don't know. I should be. I don't know. This nasaliness should be gone by then, Lord willing. So this is normally how I work. I normally work out of two sessions at one time. All right, perfect. Theta data real time. No. All right. If you're running on 7 minutes, bot saw 23. Okay. Update bot to use stated. Okay. Proceed to update the bot to use theta data for the bid ask for order pricing instead of IBKR, but make sure it is still submitting the orders to IBKR. No need to change this, just updating where bot is getting the data from. Let's get this done. Then quickly check to make sure. Good. All right. Now you're going to go. Beautiful. I knew you were going to ask that. Um, all right. You're updating to add a log line to make it clear we're using. I don't think you need to do that, but whatever. I'm a coder. I'm a coder. I'm a code. Let me verify the changes with a quick test. All right. Yeah, IBKR order placement shouldn't like that shouldn't be you shouldn't be touching that at all. I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. All right, great. Code updated. Perfect, perfect, perfect. Unchanged, real time, too slow. After we may that slippage may have to be updated again. I'm not gonna hold you. All right, let's make sure we're Gucci. Go ahead and paste. And then run it. Perfect, perfect, perfect. Theta mode.
Order filled.
Look how quick that was. Holy shit, look how quick that was. It already filled the order. We could wait. Can I cancel this one? So we're in a position. Um, hold on. We are in a position. Let's figure out the position. We are in a position. We are in 664, 665. Damn, you just messed that up. That's supposed to be a little bit better. Remember how this was before, and now it's just like you kind of messed that up. Oh, it's doing it twice. Why is it doing it twice? Are you tripping right now? Are you tripping right now? Okay, what's this order then? I think I could cancel you.
Order cancelled.
I think okay. Let's go take a look at these spreads real quick and then figure out. So it bought at um what was the delta? What was the delta? Delta was at 30, IV 22, so it's a 30% chance of being able to win. And for every dollar movement, it's moving $30. It bought in at 32, and then currently we're sitting at a loss of about $3. So let's go take a look at it. SPY option call debit spread. We said this is 664 and 665. It's at 28. Where do we buy at 32? Yeah. While this is currently moving, I think I'm gonna close this position because there's a couple things. All right, hold on. Read the logs for what has happened. We noticed a few errors slash warnings. Let's find out why and properly fix. Yeah, the order filled damn near instantly. I think the slippage is too high, bro. I'm not gonna hold you. I still think the slippage is too high. It's at 30 right now. We got in at I logging overload causing Mr. T. Hold on, what the fuck are you doing? Let me analyze the log and identify the issue. The order filled. Oh, it filled at 29. Okay, so we making a little bit of a profit. It's at 31 right now. Actual filled better than the 32. Logging overload cause Mr. T educational message is too large causing use print instead of large. Okay. All right. Proceed. I'm a coder. I'm a coder. I'm a code. I'm a coder. I'm a coder. I'm a code. We're at 30 right now. We got in at 39. I think the slippage still may be too high. So this just validated the point that I think the latest we could probably move those entries from I don't know. I kind of like those that morning one. That morning one, the early one we had today, from 9:30. I think 9:45 it got in or 10 o'clock. Just slid. So it was phenomenal. Um, so hold on. Perfect. We think that the slippage is a bit high now. Do you think we can drop to previous levels or um somewhere in between? It's at 20. Yeah, I'm probably just going to close out this position. It's at 28. I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. Slippage, let me analyze the actual versus ours. 3% owned, good balance, current. 6 to 8% is better. We filled at mid price. We don't need 12. 8% buffered, enough for the spread room. Saves money on slippage, still less wiggle room, but better entry. 6% on low VIX, 8% on high VIX, scale volatility. All right, perfect. Should we close out this position and then have a rerun with these updated? I think so. I think so. So let's do that. Let's and then once it does that, then we're gonna have a rerun. Then once we rerun it, I want to go back to finishing up our Lotto bot because that one is damn near done. I'm not gonna hold you. I'm not gonna do too many things with that. Um, let's just close out the positions. Close them out.
Order filled.
Thank you. Let's just double check. All right, we closed out those positions. Now let's check again. Perfect. Those positions are closed. Now let us go run the bot. I'm a coder. I'm a coder. I'm a code.
Order filled.
That was quick. So it got in. Remember the delta is 0.34, so there's a 34% chance it may be profitable, or it may be, and for every dollar that it moves, it's moving $34 because it's 100 in the. It's moving 34 cents if you want to do that. Or for every dollar, it's moving 34 cents. You just have to go up a bit. So where is this? 664, 665, the same one. And you got it at what now? All right, listen up. You got to call a debit spread bullish. This means you're betting on SPY to go up. You win if pay attention now. Your SPY goes above 665. Your shorter strike max profit is $65. When SPY is greater than 665, you need price momentum to make money. You lose. Don't be a fool now. And I wanted to add that Mr. T thing in there. Just thought about it. I was like, oh, that's cool. You lose if SPY goes below 664. Your strike price is both expires worthless, and you lose the 34.59 of the total debit. Again, I still think we went in a bit too high. But that's semantics right now. Let's let this bot trade, and then we'll be back. We're gonna let that bot trade. We're gonna come here. So let's go back to our setup. Okay. Trailing stop loss represents 40 out of 156 trades. That's about 25%. Key findings is that trailing stop loss are barely profitable. 25 trades. Okay. 25 trades, 44% win rate. Total P&L $7. 15 trades, 53% win rate. Total P&L $6 combined. $14 across 40 trades. TP1 and TP2. Key finding: most trailing stop losses are small wins or losses. Only one trade out of 40 actually locked in a big profit. 70% is barely profitable, right? Key finding 3, no trades got close to TP1. All right, recommendation: keep it as is. Widen to 40, maybe. Okay. All right, let's go run the back test on 2024, bro. Let's go run it on 2024. Hold on. Boom. We need open, high, low, close. Let's run on 2024. Here is open, high, low, close. And we need Greeks. Boom. And then we need the quotes. Boom. And then you're going to need VIX. So let's go ahead and get your VIX. Update and let's run. Right now it's at 32.33. VIX is at 660. 281. Where I'm at SPY. I'm sorry. SPY is at that. VIX is at 1964. Isn't that when we went to the moon? Or 1965? 1964 or 1965? It's one of those. Excuse me. After this, I'm pretty sure we're going to have this bot is going to be ready to launch. We're going to launch it and then let it go. There's still a couple things I need to tweak for the other one, but I'll worry about that in a bit. Let me just stick to the plan at hand. So we're not doing these two things at once. I don't want to confuse y'all. If you do have any questions, please feel free to drop them, and I will try my best to answer them, either live or I will come back to answer them too. We're at 33. Damn, Jit. I'm pretty sure you can run. I think you can run it. All right, it's going to run the back test. Let's go look at. I mean, we're at 33. You got in at 34, which I still think was awfully high. Awfully, awfully high. um, downloads. CPU would be Oh, let's go look at our strat road. You should be profiting right now. It's at 33, so it's holding the line at 33. It says hold it, hold it, hold it. It's holding the line at 33. I ain't gonna hold you. I told you I did it. But this is good. I mean, we're seeing a lot of great things right now, and I can appreciate this. Okay, so the trades actually happened. I was worried. I was like, all right, is the back test running? The back test is running. It's running on 2024, so it's going to be able to see the data on 2024. I hope we do get a map out for 2024, which we should. And I'm going to open that up so you all can see it. I ain't gonna hold you. I told you I did it. We're doing a lot of great things here. I'm just waiting for the back test to be able to finish up. Once this back test finishes up, we're going to be able to review 2024 and 2023. And the reason we're doing this, we want to be able to make sure that our strategy is as agnostic to years as possible, right? We don't want to overfit it to one particular year and get to a point where it's like, all right, it's only trading when it's high VIX or low VIX or medium VIX. I don't care what it is, right? I want it to be able to do well and perform well. So that's what we're doing right now. We're testing on 2024, and then once we get those results, we're going to be able to compare it on 2023, which we just completed. And then once that's done, I think we're going to go straight into creating our buy. So you all are going to see all this right from start to finish. And yesterday we started with the concept of okay, wouldn't it be cool to create a lotto ticket bot? Um, where we are buying anywhere between $10 and $15 and being able to see, okay, you know what, can we make this thing bust? So let's see. It's at 34, but it's oscillating back and forth between 33 and 34. So is it real? I don't know. Is it not? All right, here we go. All right, we want to be able to open in the browser. Can you do so? Boom. Remember, I have this is 23. Here's 24. Perfect. So here's 23. Here's 24. So let's go ahead and talk about this real quick while it's outputting. So we have the peak that 24 reached was 456.88. Remember, starting at $100. The peak that 2023 was able to reach was 412.29. Right. That's for the testing period. I mean, there's a couple of losses sprinkled in here, but I think I'm going to try to be able to mitigate that without changing the um, property so much. And this max drawdown, it's kind of, I mean, it's not real in the sense of, okay, we're testing another period. So take that with a grain of salt because that's not real. We're just testing with another period. All right. So then we opened up at two losses, and then we're starting to make. Then we have was that five, 6, 7, 7 straight wins. That's not bad. And then we ended at 379. 2024 results. We're able to go from $100 right to $835. That's not bad. That's not bad at all. Um, in the training, we had 64% win rate, about 356% return. That's better sharps. I'm liking that. Max drawdown. Again, take that with a grain of salt because it's starting again. Validation successful. Trades, wins, profit factor went up. That went a little bit better. Excuse me. Strategy is robust across 2 years. Win rate improved in 2024. The profit factor is exceptional. The low drawdowns very manageable for Lotto. 2024 had more big winners. Excuse me. Take profit one. Perfect. Trailing stop loss two. TP doubled. I love that. And VIX spiked to 38.57 in August last year. What happened August of last year? Um, oh, was that if we should cut, if we should keep, if we should cut, if we should keep? And I think that's when that's right before Kamala came in. I don't know what happened. Let's figure this out. What happened August um 5th of last year? What happened August 5th, 2024? Global stock market sell off with the Dow Jones dropping 1,000 points and the arrival of the F-15 fighter jet in Ukraine. Additionally, Israel airstrikes in Gaza killed dozens in shelters. Defense Secretary Lloyd Austin revoked a plea deal for 9/11 co-conspirators, and Hurricane Debby made landfall in Florida. The Prime Minister of Bangladesh also resigned and protested. The stock market crash, a hard sell-off occurred worldwide, triggered by concerns about the U.S. economy. The Dow Jones fell 2.6%, and the S&P 500 3%. Japanese Nikkei also experienced its worst day since 1987. Market fear gauge. The VIX measure market volatility saw its second biggest spike ever, exceeding 65. All right, so I think also that was when should they cut, should we cut, right? So we had a lot going on back in August of 2024. So that's interesting that the strategy was able to survive and make some money there. Um, so no parameter changes are needed. The strategy is working at design, working live, ready for paper trading. All right, I don't want to do that. No, we're gonna start with $100. All right, what do you want to do? Dive into specific years. Okay. What I want to do is open up another session. So then we're going to actually create our bot. Oh, hold on. Excuse me. I said, excuse me. It's at 32. So, all right, bro, it's oscillating back and forth between 32, 33, 34. I said, excuse me, 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 excuse me. Excuse me. Review our previous session log. Okay. Bro, it almost turned a profit. Should we just clear it now of this one? I think we should, but let me let it run a little bit. Um, this is for this. Okay. For the following strategy. Now, before we continue, make sure you have proper context and understanding of what we completed and how the strategy works before we create the bot. I said, excuse me, excuse me. I just need to bring a couple things over. Hold on. I need to bring over IBKR. And I also need to bring over the actual bot that we're going to reference. So let me bring that over too. All right, perfect, perfect. This is just another folder in it, right? Should I just make it? No, I'd rather it have its own. Let's have it. Let it have its own. You can have your own. It's at 29 right now. See, that's what I'm saying, bro. It's oscillating back and forth between like 28, 31, 32, 33. It's at 28. Okay. Excuse me. Review as a reference for how we want to develop the lotto bot. Then, once you understand, lay out the plan so we can get this done. So now we're going to creating the bot. This is the same steps that we took before to be able to get this done, right? So it isn't anything that is overly dramatic. It's the same steps. So what I'll do is we're trading on IBKR, right? We're still going to have its own config file. We're still going to have it respect how it trades, right? The only thing is this is going to be naked calls and puts, not necessarily spreads. So we got to be able to account for that. Excuse me. Computer. Oh, it's at 34. Look at that. The VIX just popped. VIX is popping. Look at that inverse. Look at that, baby. Look at that. Look at that. I love it. You should be bringing me money now. You should be printing. You should be printing. You should be printing. Oh, you do need you do need so you need this one. Let's go ahead and bring you over. What else do you need? Theta data is already there. So you can pull theta data. I'm not worried about that. Order execution, that's there. Unix is fine. Okay. Implement data fetching. Okay. Implement entry. Implement exit. Implement risk. Manual. Then favorite trading. Estimate. It's not gonna take 6 hours to do this, bro. All right. What you said you needed? The connection and IBKR sync. Okay. So here is the connection manager. Here is okay. All right. Here is IBKR. How did you do it? You did it from connection manager. Yeah. Okay. Here is IBKR. Here is boom. No, you don't need that one. Fuck. Did I bring over the wrong one? I think I brought over the wrong one. How are you getting out? Live. All right, bet. I thought I brought it over, but clearly I really didn't. I thought I brought it over. Oh, bruh, it's right there. All right. Here is IBKR and Alpaca files. Let's take this one step at a time, starting with the configs. Making sure not to introduce mocks, placeholders, fallbacks, no defaults, no cache functions or methods, all real implementations, and when testing, yes, you must test before going to the next step. No mocks, no py tests, all real, so we can ensure working. Bruh, bruh. Bruh, bruh. Bruh, 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 bruh. Um, Entry regime. I just want to copy this so I can have my little plan and then review it. And then I'm gonna copy you here, and I'm gonna go right there, and then you're gonna say hey, and I'm gonna say hi. How you doing? My name is Charlie. Last name Wilson. I was wondering if I can take you out, invite you to my house. Here is my number, so you can call me. And don't forget that my name is Charlie. That was that jam. This is just part of my process. I'm not gonna hold y'all. Paper, and we're good. I said we Gucci, and then we live and live. All right, that's what I'm screaming. You don't gotta be too complicated. Lotto's. Oh, it's at 36. You should be printing. All right, perfect. I told this fuck, bruh. When I say this jit does not listen, I told you no pie test, and guess what it's using? Pie test. Pie test is just another way of mocking, and I don't want it to mock. I rather you actually test some shit, right? Just to make sure it's working. I love when you don't listen to me. Oh, look at that. We're in the profit. It's at 38, 39. Where's Spy at? Spy is jumping. Spy's at 665. Look at that. 663. I'm sorry. It's moving towards it. It's moving towards it. Strategy making a little bit of money. She making some money. So the strategy is moving, man. We went from being negative to positive. I mean, yeah, granted it's only $1, but I think this is a success. This is a win. We should be able to. All right, beautiful. And I'm working, and we're finishing up our other lotto strategy, validated across 2 years. Perfect, perfect, perfect. Lotto configurations, tests, real implementations. All right, proceed. 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 Oh, it's at 40. It's at 41. And we got in at like data fetching. Lotto live bot. Okay. Oh, it just up. Oh, come on, man. Keep me right. It's at 42, 43. I think it cycles too slow. I think it cycles every 60 or 30 seconds. And we got in at 35. Never mind, we did get in way too fucking high. 34.59, but oh, 21%. Yeah, I'm gonna go ahead and close you out, friend, so we can get some great stats. Close out spy. We're gonna go here. We're gonna close you, and then we're gonna do this.
Autofilled.
Let's make sure who's number one. Oh, this is basketball. I'm about to say it. Didn't we already do that? That's Gucci. All right. Let's just double check now. So the bot just made us 21%. 21, 22%. That's not bad. That's not bad. What do I want to do? Now we want to run the bot again. We are catching the upward. I think it's gonna go put. Let's see. So 665,
Autofilled.
666, 24. Um, I don't know if I'm completely in love with that number. I may just get out a little bit. I'm not gonna hold you. Call debit spread. We talked about that, and that's if we would have caught it in the morning. That's why I'm like more so being able to trade in the morning, bruh. It's at 24. We got in at 25.59. We got in at 24. You know what? I'm not real keen on that position. So let me just close it out real quick and let's just stop force trading this bot. It's working. It's doing what it needs to do. Let's go ahead and close out that position.
Autofilled.
Thank you. Make sure it closed. Thank you. Let's check one more time. And order filled. All right. So I'm Gucci with being able to say that this bot is clearly working. Now what we need to do, let's just have it do one more. I'll let you run for 30 minutes uninterrupted. How about I'll do that? We'll let the bot run for 30 minutes uninterrupted. Once it runs for that 30 minutes uninterrupted, then we're going to see. It's going to run for 30 minutes uninterrupted. I'm not going to interrupt it. Let's see. Bruh.
Autofilled.
Okay, you got it at a better price. But is that better? So we're going to let it run for 30 minutes uninterrupted. And then we're going to see what it does. All right, so let it run for 30 minutes uninterrupted. I'm going to go back here. We still have work to do. Excuse me. Let me figure that out. When we are testing using PyTest, does that mean we are using mocks or is PyTest just a um, proper way of saying we are testing code in Python? Great question. PyTest and mocking is not the same thing. I thought it was, so that's good. PyTest is a testing framework, basically a tool that lets you write and run automated tests for your Python code, organize tests neatly, get test reports on what passed, what failed, use fixtures, parameterization, and plugins for more advanced testing. You can use PyTest to test code directly, no mocks required. But you can also use mocks inside PyTest if you need to isolate the behavior. Think of PyTest like a game tester with a clipboard. It plays the game, your code, it follows the steps, your test instructions, and then it reports everything worked as expected or not. Mocking is like using cheat codes or fake characters to test parts of the game without running the whole thing. PyTest, core PyTest, okay. Got that. Told you I'm gonna let you run for. Damn. I'll let you run for 30 minutes uninterrupted. This is what you wanted. Oh, you need that. Hold on, hold on. I thought I brought you over, but I guess I really didn't. I thought I brought you over, but I guess I really didn't. Hold on. I'm glad I caught that before I tried to pull in another. I thought I brought. It's fine. There you go. I thought I brought you over, but I guess I really didn't. Here is the file path. We moved it to here. Should be able to use now. I thought I brought you over, but I guess I really didn't. Boom. Let it run. Oh, is that 23? Okay. Okay. Let me update to use the local. Damn, you see that long ass wick? Bro, it went up to 665 and then it just. I'm not gonna hold y'all. We've been going like 2.5, 3 hours strong. And like as soon as we finish this bot, I'm not gonna run the test. I promise you. But what I am going to do is take a break for a little bit. I'm gonna be back. I'm gonna get my lunch, and then I'm gonna be back. Bro, it really wants to be able to go in this direction, fam. We're at 20. Damn. I thought I brought you over, but I guess I really didn't. The test is hanging. Let me run all the tests so far to confirm what's working. Oh, you know what you're supposed to be for freaking A. Make sure you're running in so it works properly. Damn. Is that 1921? We need to have it recycled. That's one thing I need to update it over here. The whole 60 seconds not gonna work. I think it should be like 30 that it updates the P&L because I think it's doing it every 60 seconds here. But I thought I brought you over, but I guess I really didn't. Yo, we sliding. Oh, paper stop pie test and async. Yo, you You gotta do that. You gotta do that. Oh, it's at 24. Go ahead and give me my spy. That's Gucci. Perfect. Let me test the 1 minute bar. That's Gucci them. Uh oh. Uh oh. Oh damn, bro. He's rapidly changing. It doesn't permit recent bars. We need to use, which is, wait, what? Doesn't permit recent bars. We need to use the existing, which is the workaround. Let me simplify the approach. Wait, that doesn't make sense. That doesn't make sense. It was just working for the other bot. Let's dig deep and find out the issue and properly fix it to make sure it is working. So I'm gonna let you go for 30 minutes. Hold on. It's at 23. Oh, we got some profit. You're absolutely right. The nerd spot is using successfully, so let's figure out what we're doing wrong. The issue is that the suspicion doesn't rely on recent. Nerds doesn't use 1 minute buy at all. use, use, okay. Let's use data instead. All right. Let's use data instead. Let's find out proper way to use it. Then let's do so. All right. This is data. Then we're coming here, pasting, pasting, copy, paste the data. There we go. Boom, boom. Read. Then let's get done. I think I'm gonna just need to let this compact. I'm not gonna hold you. Um, just let this compact. It's at 22. Excuse me. Damn, so I didn't even need alpaca. I mean, I kind of do, but kind of don't. This is what be annoying. It's at 30 minutes uninterrupted. You got it. You got it. You got it. Code. Yeah, we've made some great progress today. We were able to finish out this bot, and the bot is actually working. Now we're just actually creating the bot. I mean, I know this was the part that everybody's excited about, being actually able to create the bot, but I'm telling you, this is really not hard at all. Um, it's just being able to make sure that you understand your provider and what your provider does, the information that you need, set up your risk parameters, position portfolio, and I think we'll maybe spend some time like when we come back to be able to go through this entire process. But as you can see, my voice is degrading here and we're getting a bit of diminishing return. So after we figure out, we make sure that the data is working in and everything is cool, I'm going to take a beat here. Bruh, all right, I gotta close out this position. This is crazy because you're bleeding. Um, so that's one thing. I think I'm gonna make another video specifically on how to tune this bot.
Order filled.
Because JIT right now, it's working, and it's actually. I mean, there's moments, but I think you know what it is. It's like running in the afternoon because it wasn't back tested on the afternoon. It was back tested in the morning, right? So I think like it's just off a bit. But I'm going to make another video on how to be able to tune this bot because I mean it's working. We just need to tune the parameters a bit. So and this back test right here is for this bot right here that we're finishing up, right? So we should be done. Give it maybe like another 15, 20 minutes or so. But I'm not going to hold you. I'm not going to finish this all in one shot. I'm going to take a beat right here because we've been working on this all morning. I'm going to take a beat and then go grab some lunch. And then I'm going to be back A little bit towards like maybe in an hour or two, so we can finish up the bot. Okay, what I want to do is finish up the bot. Okay, let me see how much more work is left. Depending on how much more work is left, is how much. I'll decide then if I should just like, all right, just take a beat right now, cause we've been going for almost 3 hours strong. Just under 3 hours. We did a lot of great things today, and I just want to be able to continue to build off momentum. I just feel my voice is cracking a bit. Um, the test expected 200 to 404, but we got 410, which is gone. This is actually the. Let me fix. That's the thing. Day to day. I don't have, bruh. I gotta figure out. I don't want to fight with you right now. it just it just the fuck pulled spy in, and I think we need to figure out a way in order to get the spy data, and that's not hard. We do have different providers that we can go to, so I'm really not worried about that part. I just want to make sure that it's working. I already caught my log. Oh, look at that! I'm glad I did. It just went to 16. All seven tests passed. Let me update the to-do list and create a summary of what we have accomplished. All right. So all the tests are passing, and we have the foundation of the bot ready to go. Right. We just need to add the entry, the exit, how do you execute trades and shit like that. But the risk and being able to pull in the data and all of that is working. Now it's just a matter of being able to like, all right, making sure that it works. So what we're going to do when we get back is finish up the bot so we can actually have it up and running and ready to go. Then once the bot is up and running and ready to go, we're going to come back and tweak our nerds bot, right? Because there's a couple of things that I'm seeing just based on live paper trading that we need to be able to update. So in the interim, if you do all have any questions, you can definitely inbox me or just shoot a message in the comments, and I'll try my best to be able to answer it. It's your boy Creative. We're going to be back at it again soon. I appreciate y'all for stopping by. And again, this is something that we're going to be doing every day. Right now, we're stuck on algo trading, because I'm seeing a way forward to be able to like drive in some revenue, right? And it's kind of cool the way we're doing it. We're actually using a bot to be able to trade, so we're taking the emotions out of it, and we're being able to do what quants, hedge funds, these different money managers are doing, right? Because you think they're trading by themselves? No, they got bots. Theirs is a little bit more sophisticated, yes, but that doesn't mean that we can't get to that level. So I am honestly looking forward to being able to do this with you all, go through this process. Again, I don't claim to know everything, but what I do claim to do is be consistent. What I do claim to do is making sure that I want to be on here with you all every day or just about every day, being able to either backtest, create, or actually making a bot. Maybe after a couple weeks, I'll dive into something else, but right now, this algo trading is where it's at. So I appreciate you. It's your boy Creative. We'll be back at it again soon.